What's going on? We have Oliver Sloup standing by. He's with Blue Line Futures, and he joins us right now. Oliver, what are the traders talking about here on the floor this morning?
Well, we've kind of moved past that USDA report last week rather quickly. It only seemed like that's something we were paying attention to for a couple minutes, and then attention turned right back towards weather in South America, and you've seen that through the open on Sunday night. We saw a gap higher really across the board. I want to start by looking at the corn contract, though. We're right up against some technical resistance levels. 366.5 to 369 is going to be the first level. If we can chew through that, I think we've got another 5 to 6 cents, 373 to 375. This ought to put December new crop corn a little closer to that $4 handle, where I think you start to entice some of those producers to start taking some risk off the table. Now, Friday's commitment of traders report showed that funds bought back about 44,000 futures contracts, but they're still net short about 85,000. So there is still some powder, so to speak, in terms of a short covering rally. But I think producers selling may keep a lid on that if we see December work a little bit closer to that $4 handle. Now, on the technical side of things, more on a broader term chart, higher highs, higher lows, very constructive. I think the bulls are in charge here, but I wouldn't be a buyer at these levels. I think you could be patient. 357, 358 is a good value opportunity.
I want to take a look at the wheat trade in Chicago and Kansas City right now and get your thoughts on what the charts are telling us. March Chicago wheat is now 9 higher at 458, and July now 8 3/4 higher at 483.5. Kansas City has had some strong gains this morning. We have March now 9.5 higher at 475, and you have the July contract up a dime now at 507 1/4. Let's take a look at that Kansas City chart if we could to see what the trend has been. We've had some sales the last 2 or 3 sessions there, and some analysts were telling us this morning that maybe the market had temporarily gotten a little overbought there, or excuse me, a little oversold. What do you think about that?
Yeah, I mean, a lot of this is focused around that dry weather, and you guys on your program have been spot on with that over the past couple months, way before the prices actually reflected so. But we've seen a rally nonetheless over the past couple of weeks. I think we're getting towards some of these top-end levels. We're primarily focusing on the Chicago contract. I think there's going to be a lot of headwind at that 470 level. There's some key technical resistance indicators, including the 200-day moving average, as well as previous price points. I think from there, the price action above that might be somewhat limited. The chart, like corn, friendly, higher highs and higher lows, which is what bulls want to see. But I think, again, you find a little bit better value on a pullback. 438 3/4 or 441 3/4 is what we're looking for. That would keep the higher lows intact and potentially presses back towards higher highs.
Let's look at Minneapolis wheat and then the cotton market, and we will take a break and then take a look at livestock after that. On the Minneapolis wheat, this is our spring wheat trade. March now 4 3/4 higher at 608 1/4, and July up 6.5. Cotton market this morning has the March contract now trading at 76.67. It's been on both sides of unchanged. Now it's just 1 point lower. December down 3 at 75.49. We'll come back in a moment. Oliver Sloup and I will analyze what's going on in your livestock trade when we come back. Oliver Sloup is with Blue Line Futures. He's located in Chicago. He joins us right now to take a look at our livestock trade. The livestock markets this morning, we've had kind of tentative start here. Let's take a look at live cattle here first. And on the futures board, we are finally firming up. It took a while to get going. The February contract is 37 higher at 126.90. April now up 95. There a moment ago it was up over $1. Now it's 93 higher at 124.55. And now you have June up 92 at 116.35. For a long time, they didn't know which way they wanted to go here. Now looking at the feeder cattle trade this morning, let's take a look at the nearby March. We're now 38 higher at 146.58. That's well off our earlier high of 147.10. So we're about, 50, 60 cents off of that. We have April now 57 higher, now 55 higher at 148.30. May up 65 cents. So let's take a look at this. We are starting to see a bit of a rebound here in the live cattle trade here this morning. What's going to be driving this cattle market for the first day of the week here?
Well, obviously, looking back to last week, we were keeping a close eye on cash and the outside market volatility, and I think that's going to be kind of the headline factors here again this week, what cash ends up developing as, but I think maybe more importantly is those outside markets. We saw volatility in the stock indices pick up last week, and that definitely spilled over into the commodity sector, and you could almost see it tick for tick within the cattle complex specifically. I think, the bulls have a solid footing here, but we want to see some of these support levels hold. We saw them tested and held last Friday, 122.40 to 123 for that April live cattle contract. I ultimately think that this market has the potential to get back out above 126 and potentially from there encourage additional buying interest to come up and press us towards those contract highs of 130.
All right, so the chart, if you look at it, we are showing the April chart on the screen to our viewers at home. It looks like it's kind of been consolidating overall here for a few weeks. But if you look at a lean hog chart, I wanted to pull that up here too and take a closer look at this. On the lean hogs, it has been in a steady decline for quite a while after making those new contract highs. Is that something that you don't think we're going to come back and revisit anytime soon?
The contract highs are quite a ways away as of now. We've seen a big sell-off, and we were kind of looking for that, but we were looking for 69 to 70 as hold as first support, but we saw that open up the floodgates to additional long liquidation from the funds, and I think now you step towards the sidelines, and I think maybe wait for a little bit of a stabilization, 69, 70 to 70. If we can close out above there on a conviction basis, I think we stabilize the market, but until we start to see some signs of strength, I'm not in the mood to be catching a falling knife just yet.
Oh, okay, well put. Now let's take a look at those futures for everybody. I'll read off a few quotes.